Good afternoon, Ian Cooper here. Hope this finds you well. I apologize for missing you last week. I had to get my son ready for another semester, which involved driving about 14 hours north. Always a fun drive. Anyway, markets are still pushing aggressively to higher highs. However, there are still plenty of reasons for concern, which is why we held on to the DIA and Triple Q puts for so long, which eventually went against us very badly. However, as you can see in this chart of the Dow, it's now at all-time highs, which just is not sustainable. Even the NASDAQ is at new all-time highs, which is also unsustainable, especially with the trade wars, geopolitical issues, economic concerns, and the fact that investors are acting as if all were okay all over again. In fact, they're acting just like investors did before the major crashes of 1929, of 2000, and of 2008. And unfortunately, many investors and traders are about to learn the hard way again. The Dow Jones was up 300% between 1923 and 1929. Traders and investors believed that stocks could only go up. Speculation forced stocks to unbelievable highs with unjustifiable valuation. And then it all fell apart out of the blue. Then between 1929 and 1932, the Dow Jones would lose 86% of its value. And unfortunately, many investors and traders were just not prepared. In 2000, dot-com optimism sent the Dow Jones screaming higher to unjustifiable valuations. And then it all fell apart, and the Dow and the NASDAQ were wiped out. And again, unfortunately, many were not prepared. In 2008, rampant speculation sent the Dow Jones to a high of 14,038 on the heels of a housing boom. Americans were buying homes they could not afford. Stocks were exploding on economic optimism and unjustifiable valuations. And then along with subprime lending, it all fell apart. The Dow Jones would sink to a low of 6,500. And again, many traders and investors were not prepared at all. And it's happening again now. What's also worrisome is just how overextended the Shiller PE ratio has become at 39.84. It's now at its second highest peak in history and is second to the massive dot-com crash of 2000. Before long, if today's market continues to move higher, the Shiller PE ratio could push to an all-time high, which means that we would be entering a ridiculous mode, which will not end well at all. Also worrisome is just how calm the volatility index has become. Now just above 15, it's as if there are no market concerns, no economic concerns, no geopolitical concerns. However, soon, as we may see, market complacency in the VIX will soon give way to fear again. We see it time and time again. And we need to be prepared for the next swing higher in volatility if we want to keep our portfolios safe. And we can do that by using ETFs and an ETN, including the ProShares Ultra VIX Short-Term Futures ETF, or the UVXY. And this ETF was designed to match 2 times the daily performance of the S&P 500 VIX Short-Term Futures Index. There's the iPath S&P 500 VIX Short-Term Futures VXX. The VXX exchange-traded note provides exposure to the S&P 500 VIX Short-Term Futures Index. And there's also the ProShares VIX Short-Term Futures ETF VIXY. This one provides long exposure to the S&P 500 VIX Short-Term Futures Index, which measures the returns of a portfolio of monthly VIX futures contracts with a weighted average of 1 month to expiration. Investors can either buy a basket of those, or if you want to buy call options, We would also recommend buying to open the UVXY October 17, 2025 13 calls. And we would also recommend buying to open the VXX October 17, 2025 40 calls at market on Monday morning. That's all I have for you at the moment. If you have any questions, comments, or anything that we can help with at any time, feel free to reach out and we will get back to you as quickly as we can. We're going to jump back into the market, see what's next, see if markets can push higher or begin to break down. We're just curious as to what could possibly happen next, and we'll keep you informed when we know more moving forward. Again, this has been Ian Cooper. Take good care and have a great week ahead.